What's going on, everybody? It's Big T with GreenWallSt.com, back with another live trading video, this time on SBEA from last week or week before. I'm not sure when this video is going live, but the day that SBEA was running, you can see it's up 60% here. This is 7 minutes after the open, and the stock is it's moving up and to the right. A lot of times people like to overcomplicate trading. I don't. I try to keep it as simple as possible, and for me, primarily as a short seller, if I'm looking to short a stock, the very first question that I ask myself, is the stock on the front side of its move or is it on the back side of its move? And it's very easy when you zoom out the daily chart and you look at the trend for the day. Is this stock moving up and to the right or is it moving down and to the right? Very clearly it's moving up and to the right. Therefore, I'm not ready to short it yet. I've tried shorting, the front side of moves before, and even if it looks good on a chart and you nail the top of something and it feels really good, over time I've found that I'll end up losing money, and it's just a terrible strategy. So I would rather wait until people are done buying dips and they're done making new highs, and instead we're making new lows and the stock is getting sold on pops. So again, a lot of people ask me how I, as a short seller, avoid getting squeezed all the time. It's not even interesting. Like there's no short here. There's no trade. So anyway, this is SBEA. It was halted, and then it halted down, I'm pretty sure, if I remember correctly, or at least this was, the end of the move. But of course you don't know that. Like you short here, it could go to 1670, 17, 18, halt up again. I mean, we saw DWAC go to 175 from 10 the day before. So you just don't know. Even if you would have been right, you just don't know. And over time, it's a losing strategy. And that's what I'm worried about, is not necessarily nailing the next trade. I want to be able to make money over time and make a career out of this and stay in the game. And the way you do that is by trading safe, waiting for the backside of moves. So that's essentially what I did. Stock started to top. Sure, I could have tried some here and thought, maybe that was the top at 1550 and got a better entry. But a lot of times you'll see I wait a long time. Like I don't need to catch it at 15 or 14 or 13. The thing with these trades is once you really get on the right side of it and it starts working for you, there's a lot of downside potential. Like you don't need to be anywhere close to the top. That's where the toughest trades are. So I'm letting it push, I'm letting it fail, I'm letting it prove to me that the stock is topping. And then once I saw kind of this stuff move, it tried to push through VWAP where the majority of the volume is for the day, and immediately got slammed back down. That really told the story for me that this stock is now heavy, and it's going to potentially be a good short setup if I can get a nice bounce. So now that the stock is firmly moving down and to the right, now I'm interested. Now I'm interested when it pops back, to short, and that's essentially what I did. Now, it didn't pop very high, so this is just part of trading. Like sometimes you're not going to get a full huge size position on. This is one of those like base hit type trades that get you through the day. I talk about it in trading all the time, but in the other videos and my streams every day, not every trade you're going to be able to get full size on. A lot of people are like, damn, I hit that trade, but I wish I had more. You always wish you had more on a winning trade, and you always wish you had less on a losing trade. It's not the point. You're not trying to get full size on everything. You're sizing based on your conviction in the trade and how good the entry is. You'll see where I entered this stock. It wasn't a huge bounce, right? So I think I put on my trade here, which was really more of a starter size, right, at 1280, because this thing could bounce to 14 and it's still broken. Actually, at 14, from a risk reward perspective, it's a much better trade. But because I thought this may have a chance to fail at 13, I went ahead and put some on. Again, not a full size position. A full size for this for me would have been like 2,500 shares. I put on 500. Right? So like a fifth of my full size position. So think about that the next time you're trading. And even if your full size is 100 shares, you don't have to get 100 shares on every trade. You can trade 25 shares on something if it's not an ideal spot, it's not a perfect trade. those are the ones that you want to size up on the most, where you have that 95% chance of working, or the risk reward is really good, even if there's a lower chance of it working. But luckily here at 1270s, that is where we kind of started to reverse. So, again, shorted there. I'm giving it plenty of room to kind of work, and sitting here for the next few minutes. This is kind of the pullback that I was paying attention to. Had it held right here at 1250 and then started pushing through 13, very likely I would have just taken off the 500 shares because it's, holding trend, and I would have waited to short it higher with more shares, because the closer it gets to that 1350, 14 level on the chart, the bigger size I want to be, because that's the best spot. That's the closest to my risk level. Therefore, I can use more shares up there. But, I say unfortunately, I made money on the trade. We went ahead and just failed from here. You can see it starting to hold 1250 a little bit, trying to push back into 1260, and eventually, actually, it came all the way back to 1275, didn't it? And then it stuffed there, and then it started continuing lower. And once, those buyers at 1250 realize, like, oh shit, we're not bouncing, everybody stops come into play. And, trading, whether you're on the short side or whether you're on the long side, you're using a lot of times people's stops as your liquidity to get in. So you can see when we get that flush, a lot of people ask me, what is a flush? You see it in the tape there, like stocks are moving slow and slow and slow, and then immediately it's like somebody flushing a toilet bowl. Everybody stops or in the same spot, so the stock really starts to fall quicker and quicker. And you can see back here, like 1180s is kind of the last ditch support level, and I think we end up kind of crashing there. So I covered 200 of the 500 shares at support. Because this was a smaller size trade for me, I was okay with letting it come back. Like, you can cover it all right there, but a lot of times in trading, you want to try to push your winners as much as you can and cut your losers as fast as you can. A lot of people, at least when they're starting and beginner amateur traders, they'll hold on to their losers hoping that they'll come back, and their winners, they'll be really quick to take it off the table. They see money, they're taking it because, the last trade they took, they lost on. So I got to make this money. Like, I can't bear the thought of it coming back on me and being in a profit and then having it come back. I just can't do it. So they will bail on their losing trades and hang on to their losers, when in reality, you want to be doing the opposite. You want to bail on your losers, and when you're right, you want to try to maximize that trade and run it for all it's worth. That's why I'm staying patient with this, seeing if this support will hold, and it ends up not holding. So as we start to flush even more people out and run more stops, that is, again, the liquidity that I'm using to exit the rest of the position. So, as we're just sitting here on the lows, like I'm not going to cover. I'm going to wait until we get some sort of little bounce type move, and that's what I do. So you can see the volume pop up. Again, people stops getting ran. That's where I cover. And that's it. So essentially, taking a really dangerous stock, a really volatile stock, but trading it in the safest way possible, waiting for the top to be put in, not trying to guess it, and, shorting still small size on bounces and keeping kind of the worst case scenario in mind. Like, if I short here, but it keeps going, what can I do? I can take some off and then short more shares higher, just trying to, play as defensive and strategic as possible. That way I can stay consistent, stay in the positive feedback loop, and keep making money. Thing about trading, and I say it in all the videos, it's not exactly, it is how much you make. At a certain point, you want to be able to maximize your winners, and you want to be able to make the most. But a lot of it is just not losing. If people could just stop, it has the same net effect on your P&L at the end of the day. If you can find a way to cut out that $100 loss, that you just can't seem to stop taken on these boredom trades or whatever, it has the same effect on your P&L as making $100 on a different trade. So instead of me always trying to push the envelope and make the most and make more and think about profit, I think about risk, and I think about downside, and I think about how to minimize it and how can I lose less. And at the end of the month, at the end of the week, at the end of the year, you'll see that if you just eliminate a lot of your losses, you end up with more money in your account. So that's why focusing on the best opportunities, waiting for, you know, the odds to really be in your favor, not falling victim to boredom trading and doing all these other things, really over time has a big effect on your performance at the end of the year. But that was the SBEA trade. Hopefully that made sense. Thank you all for tuning into the video, and I will catch you right back here next time. Peace out, everybody.